Well, hello, my name is Sam Gregg. I'm, as was mentioned, Director of Research at the Acton Institute. I'm also a visiting fellow at the Heritage Foundation. It's my great pleasure to be here today with you, and thank you to the Bradley Impact Fund for inviting myself and my colleagues. The subject matter, as we all know, is Acronyms Galore, the real threats behind ESG and DEI. Well, we've heard about CRT, which I think has quite a bit of relevance to our discussion today. But let me just quickly begin by reminding everyone what ESG and DEI stand for and the type of content that they try and embody. So ESG, environment, social, governance. Processes that are used in corporate management, but also in investment decisions. ESG is a type of criteria that many people are now using, particularly people who see themselves as socially conscious investors, to try and screen investments for things like ethical impact, or what they call sustainability. DEI sounds like a government department, doesn't it? But it actually stands for diversity, equity, and inclusion. And the policies and programs that are used under this particular label are used to try and promote what's called representation, greater representation and greater participation of different groups within corporate settings. They talk about different people in a company, different power in a company, and different processes in a company. Now, one very important thing I think it's good for us to be reminded of is that these acronyms, of which there are plenty, don't just come out of nowhere. There's a whole history behind these things. And in fact, some people would say there's a whole ideological agenda that's driving these things. Very similar in many respects to what Chris Rufo was talking about in the last session. Some people would say, well, this is really coming from a progressive place. There are some scholars who say that, well, if you dig into the roots of some of these ideas, you find the face of Karl Marx not far behind them. So, of course, the impact of these things has been magnified, I think, by attention to another phenomenon that's become more present in everyone's lives, especially throughout 2020. And that, of course, is the phenomenon of what's called woke capitalism, or what some people prefer to call corporate wokeness. And it seems to have made its way into corporate boardrooms. It's made its way into the people who are managing companies on a daily basis. And perhaps most disturbingly, I think, it's made its way into the HR departments of lots of very large American corporations. So ESG and DEI, they're not just investment strategies, they're not just management theories. There's an entire ideological agenda that's attached to these particular things. Once upon a time, we used to talk about, in the way that Milton Friedman did, about the purpose of business is maximizing shareholder value. Well, those of you who follow these things will know that that is no longer the orthodoxy in many boardrooms today, and that ESG and DEI are very much reflective of that great shift that has gone on in corporate America without lots of people even noticing it's going on. So the stakes, I think, are very high because it's suggesting to us that the very nature of business, what has been understood to be the purpose of business, which is profit and the maximizing of shareholder value within the constraints of just law, this is gradually being erased. Now, fortunately, we have a panel today that has thought deeply about these issues, and at least here in the case of my two colleagues, they've not just witnessed this stuff, they've also experienced it, and they also have ideas about how we can push back on these particular agendas. So let me quickly introduce my colleagues on the program. They're in your program, so I won't dwell on these. But Andy Puzder. Puzder is a former chief executive of CKE Restaurants. I think it's very interesting that he led his company out of serious financial difficulties and expanded their footprint to 3 3,800 restaurants internationally. That is an amazing number. But he's also an author. He's written extensively on questions of job creation, how to get capitalism back on the road, and also some of the ways in which this relates to what's going on in the American economy. He serves as a senior fellow at Pepperdine's School of Public Policy and an advisory board member for Second Vote, and he's been published in major publications like the Wall Street Journal, Washington Post, and he's appeared on places like Fox News. Justin Danhof, Executive Vice President at the National Center for Public Policy Research. He's one of the leading voices on this subject of ESG, not least because he's one of the very few conservative activists who's actually worked in very practical ways to push back against this type of agenda within corporate America itself. He's going to say more about that in our discussion, but it involves using some of the tools that are readily available to any shareholder, really, in the corporate world. And maybe these are things that we'll be able to talk more about, and how people who are concerned about these issues can use some of the tools, the legal tools that already exist within corporate America, to try and show that these ideas are actually very destructive of the very purpose of business. So that's the introductions. Andy, I'd like to begin with you. When did you first start becoming aware of ESG and DEI in the course of your business career? And beyond that, what do you think is really driving some of these ideas?
Well, when I was running CKE restaurants, I retired in April of 2017, and they really weren't as prominent as they are now. In fact, we used to get PETA to come to our shareholder meetings, and they'd say, you know, you need to stop killing cows. I'd say, well, you know, we're a hamburger restaurant. I really didn't think anybody would take them very seriously, so I kind of moved on at the shareholder meetings from their discussion. But then you started to see it more in companies taking these sort of social positions. Now, I think for a lot of them, it's not really woke capitalism, it's sort of faux woke capitalism, because it's a marketing technique. Like when Nike uses Colin Kaepernick, they're trying to appeal to their target audience, which is young people, you know, that are athletically inclined. And in fact, after that ad ran, Nike's president got up at a press conference for investors and said, hey, the ad ran and we made a bunch of money. You know, he didn't say the ad ran, sales went down, we're not going to be as profitable, you're going to lose some money, but we're really good guys. No, that's not what he said. He said we made a profit. It really was a way to appeal to their target audience. We did it with ads with Paris Hilton and Kate Upton, which you may recall and which you may even have objected to. But you know, you probably weren't in our target market at the time. We were appealing to young guys. We're young, hungry guys, we called them. So I think a lot of what happens with woke capitalism is an attempt to appeal to your target market. Now, some companies make a mistake. Coke made a mistake. Coke went out and did a CRT, human resources program in place. They opposed the Georgia voting law. Rasmussen came out with a poll that said that 37% of Americans were less inclined to buy their product. Wouldn't you have loved to have been at the board of directors meeting after that poll came out? Anyways, that 37% were less inclined to buy Coke products now. And guess what? Within 2 weeks, they fired the lawyer who put in place the critical race theory policy. They backed off their opposition to the Georgia voting law. They just stopped talking about it and tried to get back to life as normal. So those companies sort of have a general audience to appeal to. Business Roundtable came out and said, well, you know, we're not going to focus on profitability and shareholders anymore. We're going to focus on other stakeholders like customers, employees, supply chain, and communities. Well, what idiot CEO doesn't focus on customers? You know, and employees are your most valuable asset. Well, of course you focus on them. You better focus on your supply chain, or during a pandemic or some other emergency, they're going to supply your competitors and give them better deals. And every CEO knows you have to be you want to be liked in your community. Being viewed favorably in the community is a good idea. So they're really just saying, we're going to focus on the things that drive profit rather than focusing on, on shareholders' profit. It really didn't make any sense. It really wasn't that big a move. What was a move, and what scared me and got me involved with second vote funds, which are really an alternative to what BlackRock, Vanguard, and State Street are doing. In other words, we're kind of anti-ESG. Mike Edelson's here. He can help talk about it too. I don't know where Mike is, but we're both on the advisory board at Second Vote. But what happened was Dan Grant, who runs it, came to me and said, Andy, you may just be irritated by this woke stuff you hear, but you know what? There's these funds like BlackRock, for example, Larry Fink at BlackRock. Look, he's a progressive, nut. I mean, he's an environmental radical, and he's out there trying to impose environmental policies on companies. So it wasn't really the companies that are out there, jumping all up and down saying, yeah, we're going to reduce our carbon footprint, it's going to reduce our profits. You've got BlackRock out there doing it, and BlackRock manages about $9 trillion in assets. They're the largest of these investment funds. Vanguard and State Street kind of follow them. They've got this tremendous voting power, and Justin's the only guy out there kind of opposing them. He goes to these meetings, but do you recall when Exxon, for example, recently had to put 2 environmentalists on their board of directors? Well, BlackRock supported Engine One in that effort, and BlackRock owns a lot of Exxon stock. They are the first, second, or third largest shareholder in 80% of the S&P 500 companies. And that doesn't count State Street and Vanguard that back them up. So it isn't these CEOs. The CEOs are getting pressure from these groups that hold huge amounts of shares that they vote on behalf of other people. These are, for example, some of those Exxon shares were that they owned. They got the money from state employee pension funds in the state of Texas. The state of Texas wasn't probably all that interested in putting environmentalists on Exxon's board, and it wasn't consistent with the values of the people of the state of Texas. So what bothered me was this aggregation of power in these huge investment funds that really are compelling the people who work at these companies, and if you're a huge shareholder, you vote for directors, you vote on shareholder proposals, you vote, as Exxon found out, you can lose your director votes. This incredible amassing of power in the hands of these corporate elites who wanted to change the basis on which our economic system has been incredibly successful and listed billions of people out of poverty, which is the profit motive. And so that's a long explanation, but that's how I was introduced to it, and that's where I think it's coming from.
Well, let me jump from that point and to Justin. And Andy's just given us a pretty grim picture, actually, in some respects, of what's going on in corporate America. And I like the point you made about power. Power corrupts, Lord Acton said, right?
Yep.
Power corrupts, and corporate America is not immune from that temptation either. But Justin, how far do you think this thinking has gone within the C-suites of this world? Is this something that you think is a lot of executives regard as being a type of cost of doing business? Let's just placate the environmentalists. Let's get these people off my back. Let's get my children off my back when I go home and I get asked to explain what I'm doing. And I'm not joking, actually. I think that's a real factor in explaining what some people in corporate America are doing. But how far do you think this thinking goes? And how much do you think this is really genuine ideological conviction, or whether it's just, this is what we do to placate potential opponents?
Yeah, it's a great question. Thanks, Sam. Thanks to the Bradley Impact Fund. It's worse than the grim picture that Andy painted. It's much worse than that. And I'm glad you're all awake to the woke, because now you're here and you're here to kind of get a message on what ESG is, but also what we can do about it. The state of play in corporate America. You can just take one issue to get where big business is. The Equality Act. Right now, the House has passed it. It's currently sitting with the Senate. The Equality Act takes RFRA, the Religious Freedom Restoration Act, and excises it out of the law. So it ends federal protections for Americans of faith. Full stop. It also crushes women in so many levels. It takes the glass ceiling, makes it a cement ceiling, and puts it back over the head of women in so many different settings. Sports is most obvious, but also things like women-owned businesses are going to suffer if that passes. Well, where does that law stand with big business? The Chamber of Commerce endorsed it, the Business Roundtable endorsed it, the National Association of Manufacturers endorsed it, and more than 400 companies have signed up with the Human Rights Campaign to lobby for it in the Senate. That's the state of play of corporate America right now. And how did we get here? Well, partly big business divorced the Republican Party at least a decade ago, but we only found the papers in a drawer last week. So we've got a lot of catching up to do. What happened was the left basically took the same cultural march that they took through academia in the 60s, and they just took that model and put it on business. I like to say it's a tripart takeover. It's top down, it's bottom up, and it's outside in. What do I mean by that? Top down. Well, These large companies, they don't find their own board members very often. They use these huge search firms to help them find board members. The left bought a bunch of them out. And so a couple of years ago, I filed a shareholder resolution with one of the 10 largest companies in America. I never say which company because I still have some friendlies there. And I was calling for them to increase the diversity of their board, but not the diversity of what the board looked like, the diversity of the thought on the board, because it was a monolithically left-leaning board. And the general counsel called me up and he said, Justin, you have no idea how bad the problem is. These search firms that we use, they'll bring us 14 woke leftists before we'll get a moderate. Think about that. So this is an intentional takeover of the top of corporate America. It's bottom up. Somebody had a great question earlier to Chris, like, what do you do if you're a student at Harvard and you don't want to speak up? Well, you know, in undergrad, maybe that's one thing, but I'll tell you, when you get to graduate school, you know, when I went to law school, there was like 5 of us that were right of center at the entire law school, and we all self-censored. You had to. You're beholden to your professor for your grade because they hate your worldview, right? Well, that's the same thing in business. When I meet with folks in the C-suite and I ask them an array of questions, it doesn't matter, on any ESG bucket. Why do you fund Planned Parenthood? Why did you oppose President Trump on immigration and travel when it has nothing to do with your business? Why did you do X, Y, or Z? It doesn't matter. They all say, oh, that's what our employees want, Justin. That's what our employees want us to do. It rings in my ear. I hear it so much from the C-suite. And so what we're seeing is the same thing on college campuses just being transported to big business, where the most woke activists speak up to their HR manager. You know, fund that gay pride parade next week. But if you want your business to fund a crisis pregnancy center, you're not going to ask for that. Are you serious? You know, you'll be sent to re-education camp down door number 3. And you'll have to redo your CRT trainings. And so that's the problem, is we've got this bottom-up issue where, you know, employees, you know, the Coca-Cola employee that didn't want to go to the Be Less White training, they can't say that. That's the real cancel culture, by the way, in society. That's where that exists. And then the outside-in problem, that's the world that I've lived in for about 12 years now, and that is activist organizations that engage business on their affinity issues. When I started giving this presentation, I put a pie chart up of activist organizations that work in the shareholder space specifically, and I stopped doing it because my sliver was so small nobody could see it, right? You know, we've been filing shareholder resolutions and going to shareholder meetings to engage on right-of-center issues for 12 years. In any given year, 80 to 120 groups on the left do this, groups. I'm like, Chris, I have a staff of 1. And no other right-of-center organization has figured out that we can engage in this space. And that's how the left has done it. They've engaged their money. They've rigged the vote. If you think 2020 presidential election was rigged, let me tell you, it's got nothing on the corporate proxy ballot. And we'll get into that a little bit later. But yeah, they took their march through the cultural lane, the cultural corporate lane, the same way they did through academia. And that's how the wokeness has just gone so quickly throughout big business.
You made the comment about bottom up. You said employees, well, at least CEOs will say, well, our employees are telling us we need to do this. Sometimes I'm inclined to believe that, sometimes I'm not. But if that is the case, Andy, what does that tell us about what's going on inside corporate America? As I understood it, the reason why someone is a CEO is that, yes, they listen to their employees, etc., but they are the ones that should be making the decisions, not deferring necessarily to what their employees say. So what does this say about what's happening inside corporate America itself, the way it understands itself, the way that the CEO understands his or her role in these type of organizations, compared to when you were working very actively in business, which was not that long ago?
Well, if you go back just to when I was running CK, which is 4 years ago, really, my employees wanted to make money. You know, they wanted, and the more money we made as a company, the better we could compensate them, and we made that very clear to them. And I really never got a lot of this reaction. But we were in the quick service restaurant sector. I do talk to people from some of these high-tech companies on this subject. They'll actually talk to me about it, and they say, look, we're competing for employees. And if we don't adopt some of these policies that the young employees want, then we can't get the best employees. So I speak at a lot of college campuses. I speak at YAF events. And I always tell the students, I said, look, you need to go, when you go out and apply for a job, tell them you won't take a job at a company that has these policies. We need to get something going that's kind of contrary to that momentum, because I think there's pressure from employees, there's pressure from shareholders when you've got these huge blocks like State Street, Vanguard, and BlackRock. So the CEOs are under unique pressures now that they weren't under previously. Now you might say, look, you're the CEO, stand up and do what's best for your company. You need to keep a focus on profit. But if they can do these things where they don't look like, where it looks like they're doing something that's kind of woke, where it looks like they're doing something that really doesn't affect their business or their profitability, they're probably going to do it, which is, Second Vote Funds, which is what I'm involved with. They're actually teaming up with Justin to try and make sure that we can get some proxy voting power. We're trying to build up the fund now, but we'd like it to be competitive with some of these larger kind of leftist funds so we can compete and put pressure on from the other side. But pressure from these young workers is tough. We lost the education establishment. We lost it years ago. We've lost the entertainment establishment. We've lost the media establishment. Now we lose business, we're done. And that pressure is coming down on us pretty hard.
You've both mentioned the importance of these sort of very big voting blocks, big funds who can exercise very big proxy votes at meetings of shareholders, etc. But that also sounds like somewhat of an opportunity in some respects, is right, because the threshold to be able to put forward a resolution or something like that in the world of corporate America at a shareholder meeting, as I understand it, is actually quite low. So Justin, you've done some things in this area. Let's hear more about some of the initiatives you've taken to use some of these tools, which are part of corporate law, to try and advance or at least expose what's really going on in these areas.
Yeah, let me first put a finer point on the rigged vote. We can talk about engine number one and Exxon and give that very concrete example so folks understand what we're talking about. ESG shareholder resolutions in 2018 broke every record they had ever set. They broke them again in 2019, they broke them in 2020, and yes, they've broken them again this year. So we've lost 4 straight major election cycles. And when you file a shareholder resolution, again, the left files like 99% of them, I file the other 1%, right? It goes to a vote at the annual shareholder meeting. What happened was there's these firms called proxy advisory services that propped up about, a little over a decade ago, and they were initially good governance organizations. And then they got woke. Okay, so there's 2 of them that control more than 90% of the market for advising fund managers how to vote. They're called Institutional Shareholder Services and Glass Lewis. Okay, and so they control 97%, more than 90% of the market, and they're super leftist. So they support a wide number of these ESG resolutions, and they supported, it was actually 3 climate change activists once they went back and counted the numbers that now sit on ExxonMobil's board with the stated goal of mothballing the company, by the way. That is their intended purpose, is to put Exxon out of business. They're now on the board. So you've got proxy advisors, ISS and Glass Lewis, controlling 90% of that market. Then the switch in 2018 that got it really big was these passive investors. BlackRock, State Street, and Vanguard control about $20 trillion of other people's money, by the way. They're passive. And so historically, passive firms didn't vote their shares because it's a little presumptuous when you have millions of investors of disparate backgrounds and opinions and politics. How could you possibly vote on behalf of all of them? You couldn't. So they didn't. Then in 2018, Larry Fink, the CEO of BlackRock, changed the entire paradigm. He said, because guess what? He is very presumptuous. And so he started voting. State Street and Vanguard followed suit. And so that's how they rigged the vote. So it's very likely if you hold money in the capital markets through a fund manager of any kind, you're voting against your values probably all the time and you don't know it. So you need to have a conversation with your broker, your fund manager, and just ask them, do you use ISS or Glass Lewis? Please stop. Because those aren't my values. And so what have I done in this space? Can engagement from the right be effective? Yes. To file a shareholder resolution, it is changing this year, but the threshold for the longest time, it was only $2,000 of any company's stock for a year. That's all you had to hold, and you could file a resolution. Well, what have I done? As cancel culture comes for conservatives everywhere, I've protected more than 5.5 million American employees from being canceled for their private personal politics. How have I done that? Through resolutions and through negotiations. When we started this, we had no idea how powerful shareholder resolutions could be and were, but I'll give you a few anecdotes to just kind of show what it is. When I filed one of my board diversity resolutions calling for viewpoint diversity on Amazon's board, because if you look at their board, it's monolithically left-leaning as well. Well, I had a meeting with 8 department heads for an hour, department heads. And at the end of the meeting, it was clear that they weren't going to do it. The board loves their little monoculture that they've created in there, and they weren't going to adopt my resolution. I said, Justin, we still want it to go away. If we gave you a private meeting to talk about these issues with Jeff Bezos, Would you withdraw the proposal? Folks, I own 3 shares of Amazon, and they were going to give me a private meeting with Jeff Bezos. Okay, I'm guessing folks here in this room might have a little more than 3 shares of Amazon in their portfolios, but that's the power that these resolutions hold. And so the left knows this. That's why the left engages. That's why they've weaponized their money to achieve cultural change. And we can do it. We can do it on the right. I can give more examples. I got a major bank to stop funding the Southern Poverty Law Center. How did I do it? Through a shareholder resolution and a negotiation. I got another major financial institution to stop, and they were a top-tier donor to the Human Rights Campaign. I got them to stop through a shareholder resolution. So again, conservative engagement can be effective. And by the way, it can be fun too.
Well, here's another question that flows out of that, and this is for Andy. To what extent do you think, I mean, you've mentioned a couple of times that for some people in this world, it's a question of doing business. This is my target audience. If I want to deal with millennials are the only generation that is more or less consistently progressive across the board on a whole range of issues. If that's my target audience, then I need to sound woke, I need to play that particular game. So that's one explanation. I think there's a lot of truth to that. But here's my question. To what extent do you think people in the C-suites, people who are on boards, actually are ideologically committed to this stuff? Because when people are ideologically committed to things, they'll do things that actually go against their self-interest, right? So to what extent, in your experience, have you seen this as a type of, not just a question of placating particular groups, not just a question, something we might talk about later, of fending off regulators who are poised to come along and start saying, as a matter of law, you are now required to do X and Y, or how much of this is actual genuine intellectual commitment? You mentioned Larry Fink as someone who's a progressive leftist. How many people are like him, and how many people are more like this is a cost of business issue that I have to deal with?
And I want to distinguish between Larry Fink and the guys that run Vanguard and State Street and the guy who's running Coca-Cola and any other company, or even the NFL. I mean, there's a difference between running a business and running one of these investment funds. These investment fund guys are the ones who are really pulling things, I think, as far to the left as they possibly can. And you probably have CEOs who don't support these objectives. I think a lot of companies are often very happy to hear that Justin's coming to the meeting, because they want some reason to tell their board of directors or to tell Vanguard and State Street and BlackRock that they can't do, that there's pressure from investors not to do what they're being asked to do. Now, I'll tell you, I'll bet, this is a group of people with substantial assets. If you've got a diversified portfolio, I guarantee you've got funds in there that are run by Vanguard, State Street, or BlackRock. I mean, I have them in my portfolio. You almost don't have a choice but to have funds that are run by these individuals. And they are voting shares they buy with your money to act absolutely, to force CEOs of companies to act contrary to your best interest, contrary to your values, and possibly contrary to the values of the people that run the company. Let's look at Starbucks, for example. Starbucks is this big progressive, they've got critical race theory training, they've got everything, they've got whatever, the cups are probably environmentally. Everything revolves around appealing to their progressive target market, right? And they signed the Business Roundtable statement that they're going to focus on stakeholders other than shareholders. They're going to focus on, the employees and the customers, and they signed that, right? Okay, so they said they'd be focused on customers, on employees. And when their employees about a week ago in Buffalo announced that they wanted to unionize, Starbucks came out and said, you don't have the right to unionize. Starbucks also made $1.1 billion in profit in third quarter. Do you think if they were focused on employees, they could have let them organize? Amazon, there's some profit, right? They did a big deal, big story. They didn't let their employees organize down in Mississippi. Well, guess what? They signed the Business Roundtable statement too. So I think there really is a desire in these companies. You don't hear any of these woke companies go out and report that they did a woke policy and it didn't work and their profits went down. Whenever these CEOs report, they're always reporting that they're profitable. The question is, are they being compelled from above to do things that reduce their profits? For example, if you have to implement costly radical environmental policies that generate very little return, If you have to do that to make BlackRock happy, you probably don't want to do that. I mean, you may want to enhance the profitability of your company, its share price, et cetera. But you're almost compelled to do it, or to at least appear that you're doing it. This is why at Second Vote this is our investment motto. We believe that companies that are focused on profit are more profitable than companies that don't. Yeah. Well, if your object is to focus on the politics, guess what's going to happen? You're not going to make as much money. Now, you do see some of these stocks go up because, quite honestly, if BlackRock decides to buy stock in your company, you could be losing money and your stock will go up. If BlackRock decides to dump your company's stock, you could be very profitable and your stock will go down. But the good news is that if you've invested in that company, let's say they're paying dividends, you invest in a company, and its stock price goes down, you have a chance to buy it and get a higher return. Or if you're investing in if you're following BlackRock, you're spending a lot of money to invest in companies where you're going to get less return because the price is going up because BlackRock, State Street, and Vanguard purchased them. So there clearly are CEOs who don't agree with what they're being pressured to do, but whether it's from employees or from these huge investment funds that seem to become politically motivated. We don't have a lot of time, and I want to let Justin say something here at the end, but Larry Fink in his letter, he sends letters to the CEOs of the companies that they have invested in, and he has insisted that the United States be carbon neutral by 2050, and he actually says in this letter that will require fundamentally transforming the American economy. Well, who the hell elected this guy to transform the American economy? I didn't vote for him. It seems to me like that should be something our political branch of government does, not something that a guy like Larry Fink does because he doesn't have enough support to get it passed politically. And this is what Justin is out there opposing. At Second Vote, we're going to oppose it as well, and hopefully we can turn this thing around. But it won't be easy. Like I said, I'll bet 90% of you have investments in a BlackRock fund or a Vanguard fund or a State Street fund.
Let me just throw 2 points of information out there. First of all, Larry, you mentioned Larry Fink. He's also said that he thinks that shareholders should basically be ignored. So you shouldn't even really be paying attention to shareholders in the first place, which strikes me as very damaging for the whole principal-agent relationship that traditionally has governed corporations. Another thing which is interesting, if you look at the 181 CEOs who signed the BRT statement, a couple of Harvard economists went and studied the materials that they put out as part of their corporate code of conduct, what they're obliged to do, etc. And they found that 90% of these people who had signed this document maintained maximizing shareholder value as the #1 goal. References to stakeholderism, et cetera, were completely absent. So that tells me, to a certain extent, that there's a fair amount of shadow gaming going on here, that actually we're doing this, we're placating these people, but we're laser focused, at least legally speaking, in our own documents, upon maximizing shareholder value. Third thing I wanted to quickly raise, and this is to go to you, Justin. We've heard the word politics mentioned, and you just mentioned that. What politically can be done? You're doing things in shareholder meetings, you're deploying some of the legal tools that already exist. But what do you think politically can be done, either at the state level or the federal level?
So sure, looked this up last week. Marco Rubio put a bill out called the Mind Your Own Business Act. Love the title of it. And essentially what it is it creates a better pathway to sue managers that break their fidelity to shareholders, right? So without going too far into the weeds on it, you have the right as an investor. So say, we'll take an example, Dick's Sporting Goods. They, after Parkland, they took guns and ammo off their shelves. 3 straight quarterly meetings. Ed Stack, the CEO, reported to investors that we've lost revenue because of that. 3 times in a row. Shareholders have a right to sue on that. The problem is the business judgment rule has come in as a cudgel under common law and made it almost impossible.
Do you want to explain what the business judgment rule is?
Sure.
Because I think this is very important.
Yeah, so the business judgment rule essentially says that the managers are supposed to act as stewards for their investors, right? And so that's the job and role. They're supposed to be a fiduciary, steward in the true biblical sense That's the role of the board and of the CEO. Well, if they break that, if they violate their stewardship, their fiduciary responsibility, investors do have a right to sue. But the business judgment rule has said, well, investors really can't place their business judgment ahead of those of the managers. The managers set that out and they have the control. And so what the Mind Your Own Business Act that Senator Rubio put out, it kind of flips that around and says, no, if you took a politicized action as a CEO that may have harmed your company, like Ed Stack did, you have to prove that it was for a fiduciary reason. So it flips around the control. So an investor who then is able to sue can get around the business judgment rule in that way. And so it flips the paradigm.
The only problem with that is we control 0 branches of federal government. So
right.
while Marco, it's a good law. It also impacts state laws because the business judgment rule is a state law rule. Now, so I'm actually in conversations with some people about trying to enact a statute like this at the state level. The problem is if you enact it at the state level, then let's say you enacted it in Georgia. Well, Coke and Delta are going to move somewhere else, right? You've got it. The problem is if it's not federal, then it disadvantages the state in where it's passed economically. So there are issues. I'm going back to my lawyer days here, but it would be great to shift the burden of proof, as Justin described, so that it was more of a burden for these directors to defend their actions when they actually act for political purposes. We'd love to see that happen, but it's got to be pretty broad-based.
I'm sure we've got some questions from the audience now. So if you have some questions, could you please raise your hand and someone will bring a microphone to you. We have a question over here at the front.
Thank you. I run an investments firm, a little smaller than BlackRock. But
everybody's a little smaller than BlackRock.
There's one constituency that wasn't mentioned that I think is incredibly important, and that's the consultants. And these are the gatekeepers. So basically, almost all the money we manage has to go through these gatekeepers, and that's a real choke point for this ESG discussion. And it's really dire because they're now dictating the rules of the game. And if you don't play by their rules, you get knocked out of the box. You don't even get to compete for the money, or money you do manage is pulled. So I think that's an element that has to be addressed. The other thing that I think we could use is a third proxy consulting firm. You have ISS, you have Glass Lewis. I think there's another one out there that's maybe trying to be an alternative to this, but we need a more even-handed or conservative ISS out there, or else we just don't have a chance.
Would you like to comment on that?
Yeah, you're absolutely right. And I'm not, a CFA or anything, but we started something at least small. If you go to our website, nationalcenter.org, you'll see we have something called the Investor Value Voter Guide. We started it last year. We've done it 2 consecutive years. And if you want to know how your money is being voted, and you're unsure of how to start that conversation, give that guide to your fund manager and say, how did you vote on these resolutions last year? Have them run a quick audit for you, because the guide is for conservative and Christian investors how to vote their values. So we started small. Again, I have a staff of 1, and it's a good guide. And we also put out a companion this year called Balancing the Boardroom that talks about the worst board members in America that are corrupting culture, and vote recommendations there as well. So I'd love to take those 2 guides and put them on steroids and get them to investment houses everywhere, because that can help start changing the vote.
We have a question over here.
So my question is, to what extent could state governors in particular influence this? So Wisconsin's got, last I looked, $144 billion in assets under management. We don't have a conservative governor now, but we might have one shortly. I could see 9 Republican governors getting together, and when they'd have $1 trillion, maybe $2 trillion of assets, that I would think that they'd have some sort of influence to say, listen, BlackRock, we're pulling $1 trillion away from you tomorrow unless you stop screwing around. Is that even a possibility, or could we? Has anyone talked to the governors about this?
Yeah, we've been meeting with red state. it generally isn't the governor who makes these decisions. It goes to the treasurer, the comptroller, and they have somebody who runs the pension funds under them. But we've been going out to red states and attempting to convince them that they should be investing in second vote, because we would make investments that were more consistent with their values and produce a better return. The returns we've been getting have been very positive. The problem is BlackRock's got $9 trillion. So if you buy a BlackRock product, it's very marketable. Like if you have to sell it or you need to do something with it, you can move it around. We just started last November, so we've got like 50 million. So we've got to get our assets under management up before we can be more viable at the state level. Right now, the states don't have there aren't a lot of alternatives out there. I mean, there are at Second Vote we have a rating system that rates companies. 1 leans far left, 2 left, 3 in the middle neutral. 4 leans right and 5 far right. And in the S&P 500, there are no 4s or 5s, 0. So on a cumulative basis. So it becomes very, very difficult to do that. Now, I will tell you there's one other thing. There is Anthony Scalia, who became the Secretary of Labor under President Trump, got a regulation passed that said that these fund managers can only invest in the best interests of the beneficiaries of a pension fund. And this is under ERISA, the federal law that regulates pension funds. And it's actually a very good law. He had a great article on it in the Wall Street Journal, and a great regulation, I should say. And the Biden administration came in and they rather than go through the administrative procedures you needed to go to get the regulation revoked, they just announced they're not going to enforce it.
So yeah, just to pick up on that, some people on the stage may have worked with Scalia's office on that reg. And one thing we could do is make that state law, though. So take that rulemaking.
You can't, because ERISA preempts state law.
Okay.
So
well, we need to get a better administration then.
But we did think about doing that.
And the one thing, there's other entry points for states though to think about. One of the polar opposite of me in filing resolutions is the comptroller of the state of New York. I don't know if he's actually managing the money, but he files more resolutions every year than I do. So there's no reason that, like the Florida comptroller, for example, couldn't be an activist in the same way. And you know how many shareholder meetings I go to that CalPERS and CalSTRS have their representatives there talking about their vote? So again, the same thing. They could be activists in this sense as well. So there's different entry points for states, for solidly red states to engage in this space as well.
So one of the trends that I think we've seen in the last few years is that publicly traded companies, the number of publicly traded companies are declining. And is that trend going to continue? And to what extent is a company just going private somewhat of an answer to what we're discussing?
Well, it was an answer for us. I mean, we were a New York Stock Exchange company when I took over in 2000. In 2010, we went private with Apollo Investments. And then in 2013, Roara Capital bought us from Apollo. But when we went private with Apollo, I wanted to have a party. It was so great to be out of the public sector. In fact, when President Obama was elected in 2008, I called 2 investment banker friends of mine and said, get me out of here. I don't want to be a public company while this guy's president. And within 2 years, we were private. And if I were to run a company again, I would much prefer that it be a private company to a public company. It's just they're just easier to run. It's just a lot less to deal with.
I guess that doesn't protect you, though, if regulations are brought in by the federal government or the state government, right?
No, if the federal government or the state government requires you to take some action, you have to take that action. But at least it went through the political process. It didn't just go through Larry Fink. Right. It went through people that we elected, or at least that were elected by people in a state. So that's a little different situation.
Is there a question over here? Yes.
Is there a Janus type analog effort that could be mounted, that the public unions with the opt-out provision that has any kind of traction in your thinking?
Well, again, you'd like to do this through the pension funds. You'd like to pass a state law that said the pension funds of our state can't, you can't invest them for political purposes. You can only invest them to advance the interest of the beneficiaries. But again, ERISA law preempts that. So unless we get some people at the national level, unless we elect Republicans basically back at the national level, I don't see this changing at all. And with Janus, there was a constitutional right involved. There's really no constitutional right at issue here that we could get before the court. So anyway, we'll keep fighting, but I think we got to come up with a good law. Turning Rubio's law into a state law, though, if we could do that in a way that didn't disadvantage the state that passed it, like if we got 50 states or 5 states to pass it, then it would have more of an economic impact. But beyond that, I think we just, this next election, these next couple of elections are really, really important.
Well, here's a question that comes out of that. And you've mentioned politics, you've mentioned voting. To what extent are the political class in on this game? So to what extent are, for example, let's call them our friends on the left, encouraging this type of behavior, benefiting from this type of behavior? To what extent does this flow into a type of, let's call it ESG cronyism?
So a couple of things. First, to put on your radar, the SEC wants to, and they'll probably do it in the next few months, change something that's called the materiality standard. And this is something that needs to be on everybody's radar. So it would the materiality standard says for an investor or a potential investor, I need to disclose as a business what is material to them. Well, what they're proposing to do is to add ESG into all of that. And why do they want to do it? Well, the New York Comptroller really supports this, by the way, because it's a name and shame game. Oh, on the E, you're not going to be carbon neutral by 2035. We're going to shame you. On the governance, oh, you don't have 4 LGBT members on your board. We're going to shame you. Oh, you donate to the American Legislative Exchange Council. We're going to shame you. So the SEC is now working in concert with these activist investors to try and change something that's been federally understood federal securities law for 75 years. And so Gary Gensler is the head of the SEC, appointed by Biden, and this is what he's about and what they're about to do at the SEC. So that's something that needs to be on everybody's radar. And then Elizabeth Warren in 2018 wrote something that's hilariously titled called the Saving Capitalism Act that would put all of this into federal law. It would basically federalize ESG. And so to the extent the House passed something similar by one vote, by the way, by one vote earlier this year. And so that's with the Senate right now, that very similar to what Elizabeth Warren wanted to do in 2018. So that's currently at the Senate level. And if they federalize that, then kind of the ball game's over.
So regulation is on the horizon for a lot of CEOs in corporate America when it comes to these issues.
Yeah, and comically, Larry Fink's against it. Not like very vocally, but like slightly, because he wants to set the ESG standards. He doesn't want the SEC to do it. So think about that. He said, don't worry about it. We'll take care of it. Again, who elected this guy?
Well, here's a broader question, I think, which is we've been dancing around a little bit, but I think is very germane to this discussion. What is this whole movement, let's call it corporate wokeness and its auxiliaries like DEI and ESG, what does this tell us about capitalism in America today? Is it fundamentally being transformed into something very different? And if so, what can we do to remind people that this is in fact the economic system that has taken millions and millions of people out of poverty, that has given opportunity for people from all sorts of backgrounds, they talk about diversity all the time, but from all sorts of backgrounds to advance economically, to realize the American dream. What does this all tell us about the health of capitalism in America today? Well, I'll start with you.
Yeah, it's under attack. I mean, capitalism is under attack. The free market capitalism is under attack by big government socialists. And some of you, I'm 71, some of you are close to my age. You can probably remember when they were called communists or socialists or just plain liberals. Now they're progressive. They have to change their name every decade or so because people figure out what they're trying to do. And what they're trying to do now is destroy the American system. They want to eliminate our personal liberty and our economic freedom in the interest of growing government, expanding government to the maximum extent possible, and trying to impose government dependence really from cradle to grave. And that if you don't think that's what's going on in Washington right now, you're not paying very close attention. That's happening today. They're voting on these things today. I mean, we are under attack. We have to keep talking about this. I speak to groups of college kids about these issues, and I explain to them why free market capitalism is actually benevolent because it lifts people out of poverty, and the only way you succeed is by meeting the needs of other people, whereas socialism is based on greed. which is if you're waiting in a line for bread, you're not thinking about benefiting the people in front of you or behind you in your line. You're thinking about how you can get the most bread for yourself when you get to the end of that line, which is why capitalism always results in abundance, and socialism always results in poverty and want. And they'll come up to me afterwards telling me they never heard this before. I mean, these are college kids. They never heard any of this before. They never see the graphs. They never heard about billions of people being lifted out of poverty or the incredible wealth creation. Everybody needs to speak up, and we need to support the organizations and groups like Justin's that are out there trying to get the word out and trying to save what we've got. We've faced this before. I bet everybody in this room remembers when the Berlin Wall fell, right, under President Reagan and then the first President Bush. But the big joke was the only place you could find a socialist was the faculty lounge at Harvard. Well, that ain't true anymore. And we need to win this fight again. And we'll probably, I think Reagan said it best, freedom is always but one generation away from extinction. Let's hope this isn't that generation.
Justin, just to quite slightly rephrase my question. The irony about this is that this is being driven by business, right? So this is an attack that I think has been pointed out correctly. This is partly a result of the left's infiltration. This is what they do. They're very good at this. We're not very good at it, generally speaking. But they're very good at this. But this is being driven in part by business itself. And it reminds me a little bit about what Milton Friedman said when he said that I'm not sure if it was in his famous paper that he wrote about the purpose of business, but I think he said it somewhere, and he basically said that the two groups that he identified as being most damaging to capitalism in the United States were, one, intellectuals, of course, right, naturally. The second group, he said, were businessmen. And he said the problem is businessmen tend to have a somewhat shorter term horizon. They're thinking about the company profits, they're thinking about the bottom line, but they're not thinking about the overall health of the system that enables this to happen. So your thoughts on this?
Sure. So broadly speaking, and answering a little bit of your first question to Andy too there, woke is a cancer in American capitalism. We have to kill the cancer, but we can't kill the host. So we need to separate those two and keep that in mind. And to your short-term, long-term problem, that is a big problem in business. You know who the biggest supporters of Obamacare were? The big pharmaceutical companies. Because in the short term, they wrote themselves numerous bailouts. But in the long run, while they were lying to us at the time, what if they now admitted that, of course, Obamacare was the first step to single payer, right? Of course, this was just the step in the process. But every CEO of, the Johnson & Johnson CEO, Pfizer, all those CEOs, they're long gone. They took golden parachutes and left, but they helped set up a system that in the end would federalize their own industry. So there is this short-term, long-term problem that we have within capitalism. And again, when the counterparts to what I do, the 80 to 120 groups on the left, they don't care at all about the profits of the companies that they engage in as investors. Pardon the pun, they're using the companies as a proxy for a fight in the culture wars. So they're cultural Marxists. We're talking about socialism. These are cultural Marxists who are influencing business decisions. And they have no interest in the bottom line of these companies. And we're talking about the acronym soup that we've got here and DEI and how the left constantly has to rebrand everything once we label it what it really is, which is why a lot of these schools are still running CRT trainings, just calling it something else, right? And businesses are doing the same. They're just calling it something else. Do you realize that the chief diversity officer position, had anybody heard of that 10 years ago in businesses? Mm-hmm. No, the only places they were on college campuses. So A, that's where they all came from. B, we've done a good enough job on our side of explaining just how insane that this is, that do you realize businesses are already rebranding that position? But it's going to scare you what they're calling them. They're calling them their chief purpose officers.
CPO.
The chief purpose of a business is now to run diversity trainings. That's insane, but it's real and it's happening right in front of us. And I'll give you two positive notes though, because I can scare people sometimes and I don't always want to be scary. First of all, if you slice America into the cultural lanes, business is the most recent that we've lost to the left, right? So temporally and logically, it's got to be the easiest to win back. Academia is going to be real hard. that ship has kind of sailed in higher education. So there's that. And then the second positive is everything the left did to march through the corporate culture lane, they did it in plain sight. Everything I've ever done at the Free Enterprise Project is reverse engineering what the left did because they gave me the model. So they gave all of us the model. They didn't just give it to me. So we can reverse engineer what they've done and have an incredible impact in this space.
I'm often reminded when people use the phrase diversity, I ask them what they mean and they usually explain it and I say, so what you mean is everyone looks different, but thinks exactly the same
That's good.
way. So I think that's a pretty good note on which I think it's to end, to think about the language that's used in these discussions, the implicit bias that's built into these words, but also I think some hope, because I think that point that Justin just made about reverse engineering these things, the left are very good at doing this, but there's no reason why conservatives can't follow the same model. So thank you very much.
Thank you, Sam. Justin?